So we also, as always, will bring you a bunch of secondary transactions every month. This month feels relatively light, but two interesting deals. And what is the common factor between both? It's our friends at A91. Not too long ago, they also featured on a secondary deal that involved our portfolio company, IntrCity. So I think if you see A91's investing style, they're loving the fact that they can get good value assets a little late in their life cycle. IntrCity is like a 10-year-old business. So is MoEngage, which they've just bought into. And they're able to get that as a combination of primary and secondary, and therefore that makes for an attractive blend of pricing. So MoEngage, for folks who don't know, does compete with one of our portfolio companies, WebEngage. It's also kind of similar and competes with CleverTap. They've done very well from whatever I've heard. I only know of the founders fleetingly because of our position in WebEngage. But it's an AI-led customer engagement and marketing platform, supposedly about 1,350 customers, brands across 75 countries. They personalize communication across app, web, email, messaging. And the way this deal was structured seems to suggest that there is a primary leg, which values MoEngage at about 715 million. The secondary shares done at about a 15 to 20% discount. So the blended valuation comes to about 700 mil. And the primary and secondary is 60-40. So 100 million broken up into 60 and 40. So obviously we're working off news reports, so we don't know the exact numbers. But this is the map. In our exit frameworks that Blume bases all these commentaries on, we've always said this, that if a company crosses about $500 million, it tends to then start giving chunky 10, 20, 30, $40 million kind of exits to existing investors. And then it becomes attractive even for institutional investors to sell. And that's what's probably happened here. I'm thinking it's partly angels, but partly folks like Z47 is rumored to have started selling. And there is a second rumored deal over and above this, another $100 to $200 million. So it's not been confirmed by anyone. We don't have the final numbers, so we'll probably cover it in the edition of the secondaries. But what does that say? That suddenly a close to profitable billion-dollar company can have $200 to $300 million of action, of which almost half of it can be secondaries. And we've seen that, as I told you, in Spinny, in Purple, and in our portfolio. I can talk about what I know very well. And it's no different in MoEngage out here. And I think Z47 is a big shareholder, probably trying to get out in a combination of both these deals. So the incoming investors here were Goldman, which was already an existing investor, and A91, which is a new investor. They both co-led this deal, and we don't know the exact set of exiting investors. But my gut suggests it's Z47 and a bunch of angels and early investors. No rocket science about why primary capital is raised. It's obviously to push further growth. So I think bulk of the primary capital here is for their product called Merlin AI. And then they have a decent presence in North America. Already 30% comes from there. EMEA is 25%. India, Southeast Asia is 45%. So this is to obviously push geographically and continue to compete with Braze, CleverTap, WebEngage, leaning more into agentic AI and cross-channel orchestration. So the 40% secondary gives some of those backers the liquidity they need and doesn't force the company to think about an IPO right away. And Goldman and A91, in a combination of primary, secondary, have picked up a chunky stake. So classic $500 million to $1.5 billion range deal, where you have this nice mix of both pricing and ratio of primary and secondary. Another deal where A91, as I mentioned, has been involved, Spacewood. Spacewood Furnishers is a Nagpur-based modular furniture maker. Kitchens, wardrobes, home and office furnitures. Has its own large integrated plant, 35 plus exclusive stores, 500 plus dealers, 150 towns. So it's not small by any means. The deal looks very close to what we saw A91 do at IntrCity, slightly larger in every element. It looks like about a 300 crore investment, 25%. Looks like a 1,200 crore post-money valuation. Again, we're working off public data, so I'm giving you approximations. And the media reports do state that it comprises both primary and secondary. I think there were two investors, Sumitomo Forestry and Brand Capital, which funnily enough was the last employer for three Blume partners, Ashish, Sajit and Karthik. And so these folks seem to have exited as well. A91 has built a sizable position in what is probably a profitable or close to profitable company. And I think this capital, which the primary side is going to upgrade and expand the Nagpur facility, scale up from that 35 exclusive stores to maybe 80 to 100. So definitely 2x, if not 3x the size of the network, build more dealer network, do more omni-channel from what we're hearing, Amazon, Pepperfry, and then prep for an IPO in 4 to 5 years and continue to grow at 25-30% and hit like maybe close to 750 to 1,000 crores in revenue in the medium term. Again, this is of a different nature, as you've seen, not as large. It's in the 1,000 crore-ish range as opposed to a billion-ish range, but also very attractive if a company has figured out how to turn EBITDA positive and has very predictable math on how it can get to 25-30% compounded CAGR in growth with improving margins, which is almost very similar to the deal makeup of IntrCity, which was in our portfolio. We had a bunch of companies which filed for DRHP or went public in the last month. Capillary, Pine Labs, Physics Wallah, Groww, SEDEMAC, Manipal Payment and Identity Solutions. And surprisingly or not, there are not too many pre-IPO kind of deals in this space. So that's what we would typically cover in the secondary piece of our podcast or of our commentary, monthly commentary. And it's also, I think, because we're seeing a growing trend of this consolidation of stake 2-3 years before the IPO. And we've also maintained this historically, that if you look at the liquidity window, it starts opening at T-3 to IPO. Both the deals today we spoke of are kind of symbolic or emblematic of that, right? Which is T-3-ish, you get a big investor or two who come and clean out the cap table. So there is no urgency to have another round of pre-IPO secondaries at T-6 months or T-3 months. And I think this is also something we're going to see more of, more and more secondary funds getting into the market, some of the larger growth funds consolidating ownership, not buying 2, 3, 4, 5%, but buying 15, 20, 25%. And basically that allows for the lot more consolidation, a lot more secondary, a little earlier than pre-IPO, before or just after the DRHP. So that's a wrap for this month's secondary commentary. Again, buzzing market, a lot of action towards IPO build out. So I wouldn't be surprised if this momentum also continues, much like the M&A market. And it's going to be a pleasure to keep doing this. We're almost at the end of the year. We started these commentaries earlier this year, and we're looking forward to how much more exciting this is going to be in 2026.